On the back of Gilead's third quarter beat and raise, getting some reaction from the street. Corey Kasimov over at JP Morgan saying that beat was mainly driven by the company's HIV franchise. Biktarvy, which is its newest HIV drug, came in at $386 million versus $325 million as the consensus. But he also did note that there was a small miss on their hepatitis C franchise, though, as we know, that's been shrinking over the quarters and is not quite as important anymore. Jared Holtz at Jefferies saying, quote, "You'd think that the stock would be up a bit, but investors are really waiting for a new CEO to be announced to make this a bigger bet." And of course, John Milligan, the CEO of the company, did announce last quarter he'll be stepping down at the end of the year, getting a lot of questions about that on the conference call. He was just telling people that there are many very interested candidates. The process is moving very quickly, and he says they hope to have someone announced by the end of the year. Gilead up about 0.5% there.
All right. Thank you very much, Meg Tirrell, in the newsroom. So anybody in Gilead biotech trade here?
I sold Gilead at around $75. Gilead is one of these names that we keep waiting for. This may be the reason for the change at the top. This is a company that has had HCV, HIV franchises. We've been waiting for it. We thought CAR-T, we thought that deal was going to do it. The market just does not believe these guys are well positioned for their next phase. They've got a great balance sheet. They certainly pay a decent dividend. But this stock, until we know what that next purchase is going to be, and M&A scares people in biotech, I think the stock remains range bound.
Biotech has been acting sort of, I don't want to say atrocious. Amgen's up 8% for the year, but Celgene is down 30%. So if we're talking about drugs, the volatility that's already innate in that space, the IBB is down 4% for the year. I think you're better off going to the other side and going to a Pfizer that's up 20%, a different side of it. Biotech, yeah, exactly.
I mean, do you want to be in a biotech trade when tech and high valuation names seem to be so out of favor? The XBI had its worst single day in 12 years.
Most of those biotech names,
in 12 years.
Most of the top of those biotech names, those are not expensive valuations at all. I think they're very cheap. I mean, Celgene, Amgen, Gilead. I mean, but I agree the rest of it. But I don't think valuations are a problem in the big caps.
I don't know if the rhetoric from the president today is weighing on it as well, talking about drug pricing. I mean, if they get something done, I've got to think that puts pressure on the space.
I would just add, though, it's kind of a trader's market right now. So the XBI was at 100 at the start of September, and now it's at 80, and that's a level that it's bounced off a lot. I mean, a lot of these sector ETFs have traded in these sorts of ranges. So if we're at the low end of the range, I don't like the idiosyncratic sort of risk of any of these names at this point. But once you get through earnings, maybe you have less of that. But the XBI, if you're going to take a shot, then you would do it at 80, right? I mean, that's kind of the way I think about it.
Carter, what do you see on the Gilead chart in the biotech space in general?
I mean, Gilead, I think Tim's got it dead to right. It's been waiting and waiting, and it's not particularly bearish or bullish. It just might be an equilibrium moment. It's worth $70. Here's the action after hours. I mean, it's a big yawn. You're talking about 8 cents. But let's look at the chart and try to figure it out. First, the IBB. Again, it's remarkable. All the same thing. Down 18%. You saw the exact same percentage declines in Google, Amazon. But what is different here, right, is that we've come down to something of a level of support. And Dan just referred to it. He was talking about the XBI, but the principle is the same. So if I were to put the line in, you can see it there. And I think you've got a decent shot of at least holding here and not really getting that word. In terms of Gilead, well, I mean, it's the same thing in reverse, really. Downtrends have a way of stopping at junctures that are identifiable. The stock has indicated unch. But the real story, of course, is the great run-up and then the great nothing. Obviously an epic thing, right? Effectively $5 to $120. And now, Tim's, we're just doing nothing. And that's exactly it. Sometimes you have a stock that's priced exactly right. $70 stock, I would say, do nothing with it or retain your bias. If it's your greatest long, stay long. If it's your best short ever, stay short. So there's nothing in the chart that suggests it's exciting.
Getting back to that, to the ETF, Carter, it looks like you're saying that's also going to do nothing?
Well, the ETF has, because of the precise lows from which it has bounce potential, I think I'd rather, for instance, be in IBB versus those big tech names.
All right. Thanks for that, Carter. Anybody interested in putting an IBB trade on?
If you're going to do it, I think to Dan's point, I think you want to do it with an ETF versus do it with a single stock. But when you look at it, you get your Amgen, you get your Gilead, you get your Celgene, you get your Biogen. And you don't have to worry about one of these one-offs that something's down 30%. Gilead has Hep C, HIV, those two franchises, and they're trying to replace the CEO. A lot of headwinds for one stock.